How are we going to beat the stock market? I want to break down everything that I just reviewed, talking about how have we were able to have a 15-day win streak? How were we able to win more than we lose? How are we able to grow our accounts? How are we able to put the odds in our favor? So this entire thing, just a little backdrop so far, in 2023 so far, I have a 72% win rate. I would like to get that up a little bit higher, but overall, I have a 72% win rate. Now, what's one of the biggest things I want you guys to understand about this? 72% win rate. That means 7 out of 10 trades I make are going to be winners. 3 out of 10 is going to be losers. I would like to get that over 80%. Now, I have some full-time stock trader friends that have less than a 50% win rate. So how do they do that? How do I have some friends that only win 40% of the time, sometimes even only 30% of the time, but they're still full-time traders? I'm going to show you exactly how right now. They are going to be people who are essentially, they are going to be buying in on stock 1, buying in on stock 2, buying in on stock 3, buying in on stock 4, buying in on stock 5, buying in on stock 6. This might be all within the same day. This could be spread out throughout the entire week, but they are people that do this. They buy in with huge, large quantities of shares or contracts, and they have the tightest stop losses that you could imagine. They are someone who says, hey, I'm buying in a large, quantity of shares or a large quantity of contracts. If it even dips underneath my entry, I'm going to get out of it. So they may lose because they're buying a lot of, buying a lot. They may lose $1,000. They may lose $1,000. They may lose $1,000. They might lose $1,000. So right now they're down $4,000. But the thing is, all they need is one win. They have, of course, that very quick stop loss. But the moment that they just nail that one winning trade, guess what happens? They make $15,000. So what are they up on the week? They're up $11,000. They're up 11K. So this is a strategy that I want you guys to understand. Not every single full-time stock trader needs to have a 95% win rate, because that's not even possible. What I'm saying is I want you guys to win more than you lose. I want you guys to have a 60, 70, 80% win rate. That's what I want you guys to have. But at the same time, even if you are a person that has less than a 50% win rate, you can still be a full-time stock trader if you follow one important rule, which is have a stop loss, which is I say this and it goes in one ear and out the other. I say this and still 99% of people are not going to set stop losses. I say this and still 99% of people are going to lose $11,000 and take profits after they win $1,000. That is reverse. Play the reverse Uno card, because that is how you are never going to be a successful stock trader. Stop losses are everything. So far in March, well, March is now over, but in March, guys, was an incredible month for me where I was able to have an 87% win rate. I went 15 days in a row of winning. And as you guys know, 15 days in a row, you might say, Deck, that's only half the month. But really, when you think about it, we only have 5 days throughout each week. So week 1, 5 days, week 2, 5 days, week 3, 5 days, and then week 4 usually comes on out to 3 or 4 days, depending on how many days there are in that, 30 or 31 and where the weekends were. So I was able to win 87% of the time over in March with great 15-day win streak, which was absolutely fantastic. And I want to teach you guys exactly that. So how was I able to do that? It really came down to a lot of fundamental trading. I really think that a lot of us, team, kind of get cute with our trading. And hey, team, please understand, when I say these things, everything that I state is from things that I've done in the past wrong. I don't ever want anyone to be like, oh, hey, Sean, you're saying don't do this. I've seen you do that before. Hey, don't again try to make some sort of crazy trade. I've seen you do that before. How do you think I'm putting together this education from my mistakes? How do you think I want to teach you guys? If you guys want to make the same mistakes that I've made before in the past, obviously they're easy to make. Mistakes are easy to come by. But the reason why I teach you and put so much time into trying to put these slideshows together is so you don't have to go through the loss of capital that I went through. Why would I want you guys to go ahead and lose X amount or make some sort of bad trade or get cute with your trading and try to do something fancy when you don't need to, because that's just going to lead towards losses? Trust me when I say you can make more money than you can ever have imagined just by, again, staying true to the fundamentals, right? That's what it's really all about. Because I know what happens, guys. Our minds race. Our minds go crazy. Our minds are constantly, again, thinking, how can I, again, do this? How can I do that? And that's what I call fantasy trading. Fantasy trading would be if I took a look over on, let's say, GFAI. And GFAI, let's say I was biased towards GFAI. I wanted to break out higher. What would a fantasy trader probably say? Well, a fantasy trader would probably say to themselves, hey, Deck, I'm going to get in right now. I'm going to get in right now and I'm going to have, stop stop loss at $15. I could see $15, $15 holds up as $15. Hey, I like that play. If you get in and you have a stop loss and you hold it at around $15 and you say, I'm going to get out if it goes underneath it, I'd like the play. I think there's a lot of optimism. But then you start kind of getting a little too crazy. Why do you start getting a little crazy? Because you start saying, yeah, because if it holds $15, it'll probably run back on up towards around $16.50 because that's the old highs there. And then let's be honest, guys, if it gets all the way back up to $16.50, it's probably going to run back up to the high of the day. And the fact is, if it gets all the way back up to the high of the day, I mean, that just shows it has a lot of strength. So probably it'll break through that $18 mark and probably run up towards around $20. And could you imagine if that actually did happen, the short squeeze that would happen? We would be testing $23.75. And if we even close anywhere near that $23.75, we're probably going to gap up towards like $30. By that point, every single person is going to be looking at it tomorrow, and then it's probably going to shoot up to like $50 plus. This is fantasy trading. Fantasy trading is where literally we are at $15 right now, and we're talking about the stock being at $50 plus. Where the heck did this come from? Where the heck did all of a sudden $50 come from? And now, next thing you know, what's going on? We're in on too big of positions. Next thing you know, we're underneath $15 and we're still adding to our position or still holding to our position because we just made up some sort of hypothetical situation where we are just saying to ourselves, wow, this is all the way up to $50. Becoming a fantasy trader. That's not what we want to do. That's not the trader we want to be. We don't want to put ourselves in that sort of position there. So we want to make sure we are using our head with every single trade that we make, making sure we're being smart, making sure we're doing the right things, right? So let's get back over towards this right here. So what are the ways to truly win in the stock market? Avoid anticipating the next move and look for the standard reversal. You will see 4 times as many reversals as you do breakouts. And I stand by this, and I'm going to preach this, and I'm going to tell you guys this day after day after day after day, because I've gone through so many years, team. I've gone through so many years where all I did was say, man, get ready for the breakout, and the breakout doesn't happen. How many times have we done, and let's just go over towards Google, and we can even look at textbook examples here. And if we talk about support and resistance, how many times have we looked for a breakout and a breakout has not happened? How many times have we ever jumped in on a play and looking for a short on a big time crash and it did not happen the way we wanted? And what I mean by that is when we take a look at this, we can clearly see that the majority of the time, if we go ahead and we say, hey, you know what? I'm going to do a short at resist, you'll win. And hey, you know what? I'm going to do a short at resistance, you'll win. And hey, I'm going to do a short at resistance, you'll win. And hey, I'm going to do a dip buy at support, you'll win. And hey, I want to do a dip buy at support, you'll win. And hey, I want to do a dip buy at support, you'll win. That means out of 6 trades, by doing puts at highs or shorts down low, you are going to have that 100% success rate. That's what this has been so far. And eventually, yes, what happens? A breakout happens and it does the same exact thing over and over again. But what does the majority of people look to do? The majority of people do this instead. This is what the majority of people do. It spikes on up and they say, okay, I'm going to look for a break, and it falls on down. And they say, okay, it's falling on down. Let me do a crack, right? Let's see if it dumps on down. And they again jump in right here trying to short it, and they take a loss. And then it spikes on up. They say, yes, here comes a break. I'm going to buy in right here, and they take a loss as it goes on down. And they say, well, I guess it's dumping on, and they take a loss. And I guess it's spiking on up. Get ready for it, and they end up taking a loss on down. And they say, well, and look how we just changed. The thing is, when you're in support and resistance, 90% of the time, it's going to stay within support and resistance. And then guess what's going to happen? It's going to break out once and then get back in support and resistance. So when you think about your trading and you think about what you have been doing, let's think about this as you're trading right here. All the areas of success. You could have shorted it here, dip buyed here, shorted it here, dip buyed here, shorted here, dip buy here, and you would have had a 100% success rate. But instead, you are looking for a breakout and you are losing here and 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 losing here. And then finally, you get your win. And you win right here and you say, yes, I won. Yes, I did it. And now you have wins. You have 1 win and you have how many losses right here? You have 5 losses, right? 5 losses, or 6 losses, which is awful. Why would we want that at all? Losses 6. Does this look like someone who is a consistent stock trader? Does this look like anyone who is great at stock trading? What I would rather completely reverse this and reverse my strategy in every single way. And I would rather do this, guys. I would rather find again my entry and say, okay, I win here, 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 I win here. And you know what? I enter for another put contract right here and I take a loss right here. Because you know what? It broke out. I got squeezed and I took a loss here. Doesn't this look like a better strategy? Today, I'm open, I'm honest, I'm transparent. I again jumped in on this play, the SPY, excuse me. I jumped in over on the SPY today at the price of 409.50, 409.70, 409.80. Why? Because I was looking for a reversal on down. And you know what? We had it for a second, but then guess what happened? It went whoop and squeezed me on out. That is this one right here. I got squeezed right there. We know my stats for March. You guys were all here for March. I had an 87% win rate in March. So today, this was my L. But if I stick to the strategy, guess what? I'm going to have all these W's. I'm going to have all of these W's. I'm going to have so many W's coming on up. If I, again, just avoid looking for breakouts, that's where, again, you are going to be more successful. I'm telling you guys, avoid breakouts and you guys will have much more success. Avoid looking for massive dumps and you guys are going to have much more success. Now, yes, there are going to be days that we do have crazy climbs and crazy dumps, and that's going to happen from every now and then. But if you can find some sort of channel setup, you are going to have massive success. Because if you stay within the channel, you aren't going to lose. You are going to have more wins than losses. And that is the most important thing. So the S&P 500 here, or penny stocks that you trade, look to stay within support, look to stay within resistance. If I again take a look over on the SPY, of course, over on the daily chart, this is kind of what I'm talking about on the daily chart. The daily chart, 415 top resistance, 405 bottom support, 415 top resistance, 405 bottom support. We can also see the uptrend support. Buy at support, sell at resistance. Let's stop trying to find these random crazy breakout areas because we all want to do it. I get it, guys. We all want to find the breakout. It's fun. It's appealing. But would you rather do something super exciting that you lose all your money, or something that maybe not as fancy, but you win 95% of the time? That's what I would rather do. So let's go ahead and let's keep, talking about this. Let's keep breaking this on down here. So let's talk about the three major points that we are going to be seeing reversals at, because we're not looking for breakouts or dumps. We're looking for reversal. Is going to be top resistance, bottom support, and going to be looking at the VWAP. Okay. So if we go ahead and we just think to ourselves, what's top resistance? Top resistance is going to be, of course, resistance lines. And what we want to think is about finding our platforms, finding the areas that make sense to us on where strong reversals are going to happen. Same exact thing with bottom support. I'm assuming that the majority of you guys know what support and resistance is. Support is an area where we keep bouncing off of, and resistance is an area that we keep having trouble off of, where we run up to it and we reverse. Usually the VWAP is always a great area of a reversal as well. So when we talk about three major points, we're actually talking about three major points that we are going to see an opposite direction. Let me clear the area right now, a reversal. This is probably the number one, I would say, like fake insult I get. All right. And the reason why I say it's fake insult is because they're wrong. And what it is I'll see a stock, or again, the SPY, move up, move up, move up, move up. And I'll say, guys, get ready for a possible put contract. And everyone will say, Deck, why? What the heck? A put contract? No, the market's moving on up. Market's moving on up right now. Why in the world would we ever do a put contract? Because we have already gone from point A to point B. Now, yes, the stock market can move up in time, but when we move up in a quick and a dramatic fashion, especially up to a strong resistance line, we don't make money from buying at the top after everyone already made money. We don't make money when we buy up here. Where we make money is where reversals happen and we start falling back on down here. It seems like traders put themselves in a box that they never are going to win. It's either, oh wow, the stock is going on up so high, I missed it. Or the stock is going up so high, let me buy it at the tippity top, and you end up getting dumped on. And now again, oh wow, the stock's going on a big time dump, oh I missed it. Or hey, the stock's going on a big time dump, let me go ahead and short it, let me go ahead and short it, let me go ahead and short it. And guess what happens? Then it starts bouncing back on up. And then you get the people always saying, why is it everything I do is wrong? Every time I buy it, it goes down. Every time it goes down, it goes up. Every time I do something, I'm wrong. Because you wait until the play happens. You wait until the stock spikes. You see the spike. Now you say, okay, I feel confident to buy it because I know it's going up, so I'm going to buy it now. But that's the time everyone's going to start selling it. And now again, it starts selling it. And you say, that stock stinks. I don't want that play in any sort of way. And then it starts dumping. Oh, that one stinks. And then guess what happens? It starts going up. And then you say, oh, I want to get into it now. And then you start buying at the top when you should have again been buying it when you said that stock stinks, right? If you again say that, oh, this stinks, you have to understand that there are things called dips, dip buying opportunities. We get rich off reversal, not getting rich by by buying after everyone else has bought, that means we're buying at the highs. So let's try to practice right now finding these platforms. Okay, let's practice on finding these platforms. That's what I call them, support and resistance, on where reversals should be happening or could be happening in the future. So let's just kind of get rid of everything here, team. All right, let's get rid of everything. Let's start with the S&P 500. We can look at all different plays, and this is something I think every single trader should do. Always start in a daily chart. Okay, do it in a daily chart and just take a look over on the SPY right now. And when I take a look over on the SPY, look for uptrends, look for downtrends, and look for platforms, areas that you could say to yourself and you can connect the dots and say, wow, every time if it's hit this price point, we've fallen on down. Every time that we have come up to this or come down to this price point, it has bounced back on up. So let's see what I can do. What I can do when I take a look over on this play, I would probably be saying, hey, you know what really stands out to me? I would say probably right up towards around this like probably I would say right around this, probably right around this 417-ish mark, right? Why 417? Well, go back into a daily chart, make your chart very big, and you guys can see that I would say, hey, look at this. We bounced here, we had some bouncing here, but then we had a lot of resistance. Every time we touched it right here, we fell right here. We could see we touched it up here and we fell. There's probably a great chance this is a nice platform that if we run up to this area, we'd probably again start falling back on down, because every time we've hit this area, we either bounced off of it or we dump back down towards it. So if we're underneath it, right? If we're underneath it, let's think about what has happened in the past. If we come up to this area, well, what did it do right here? Well, it came up to that area and then it came on down. Okay, cool. And what did it do right here? Well, it came up to that area and it came on down. Okay, cool. And what did it do right here? Well, it was above it, so it bounced off it and above it and it bounced off it and above it and it bounced off it. And what did it do, if we want to say right here? It again came up and it came on down, came up and then came on down, and then finally it got a little bit of a breakout. So to me, this is a key area that I know is going to be a reversal. Can we have a possible breakout? Absolutely. But you know what? We bounced once, bounced twice, bounced three times, rejected again at 4. Now again, we had 1 breakout and we had 5 again turnarounds. So you're telling me we had 5 reversals and 1 breakout? Why would I be looking for a breakout? I'd be looking for the area that had 5 times, not again the 1 breakout. Let's look for another different area here, team. So let's kind of turn this off and let's kind of, even if you need to, put a line and just kind of go across the board. Say to yourself, where was there a ton of dip buys? Where were there a ton of bouncing? Where's there going to be a ton of opportunity to be able to get filled? You can always do again like the strong numbers like 400 or so. 400's a very nice strong area, but I would probably do at this point, I would probably say, let me try to line this up the best I can. I would probably say somewhere back on down towards around like that 389 to 390 mark. This would be a very strong support line towards me. And the reason why I would say this would be a very strong support line if I turn that into blue is because I can see in the past a lot of old bouncing, a lot of old highs right around 389 to 390. So if we take a look, you can see a little bit of bouncing here. And yes, we did crack slightly underneath here. You can see a little bit of bouncing here. You can see this was right before it sold on off. Here's a nice old high. Here's a nice old high. Here's again a nice little bounce. Here's a nice little bounce. Here's a nice little bounce. Here's again before it dumped on off. Here's again some old chat. Like this it looks like a nice little platform to me, where if I said to myself, all right, hey, we bounced off this area. We bounced off here. We bounced off here. We again had resistance here. We bounced off here. We bounced off here. We had resistance here. We had resistance here. We did crack there. We had a bounce here. We did crack there. So let's see all the areas that we actually cracked underneath it then. We again, we broke out of this area. Here's one breakout. Here's one crack. Here's one crack, and here's one breakout. Thing is, let's add them all up. 1, 2, 3, 4. We had 4 kind of breakout, and we also, if we said we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different times that we reversed. If we come back on down towards around this, the 389-ish area, I would be thinking that it's going to come on down, probably again, look for that reversal, back on up somewhere, because that's what we have done. So it's great to be able to realize that. Now let's go over to a different play. Let's just go over to Tesla. This should be again pretty straightforward. Where would your platform be? Where's the area that honestly makes sense that it's going to be when you hit this for the first time? It's probably going to be a nice reversal area. And to me, I already see that we have a bounce here. We have a bounce here. We can see we have bouncing here. We have some old tops. They're all kind of lining up, close. See what we have, and then we can always adjust it. We can go right across the board. And yeah, I would probably say let's just make it a nice even number of 210. If we go 210 right here, wouldn't 210 make sense to everyone? I think 210 is a good area that makes sense for every single trader. Hey, Deck, we had a bounce play here. Boom. We had a bounce play here. Boom. We had a bounce play here. Boom. We had a little bit lower, but then a bounce play. And then we had a crack. We had a sell off right here. There's your dump. Then we had a reversal. If we take a look, reversal right here. Boom. Reversal right here. Boom. Reversal right here. Boom. Reversal right here. Boom. How many times did we reverse at that area? 1, 2, 3, 4, 5, 6, 7, 8. 8 times we reversed. How many times did we get a dump? 1 time. So we again dumped, or we would say, kind of broke out, broke that trend line 1 time. So why are we doing this? Someone please answer my question. Why are we constantly in the mindset where we are always looking for breakouts or big time dumps? Oh, Deck, I'm going to nail the biggest spiker of the day. I'm going to nail the biggest move, the biggest climb, the biggest rip, the biggest, it's going to be everything, but there's a 1 out of 8 chance that that's going to happen. Why would we do that? Why wouldn't you just rather take the 7 out of 9 chance of the reversal happening? Or 7 out of 8 chance of the reversal happening? I don't get it. And ever since I kind of came to reality and started doing this, I stopped looking for breakouts and I started looking more for reversals. And I think it's a great homework assignment every single day where you guys can go ahead, type in different plays where you can try to find those platforms where you're going to bounce. I mean, guys, take a look at how strong this platform area is, probably right around that 102 mark, right? We can actually go probably a little bit higher, probably right around that 103 area. But look at this platform area over on Amazon. Guess what happened? We again bounced here and bounced here and bounced here and bounced here. We reversed here. We got one big breakout right there. And we're starting to get a little reversal right here. What do the odds tell us? We are going to be having a reversal 1, 2, 3, 4, 5, 6 times, and we are going to have 1 breakout or 1 dump. Why are we looking? I know so many people are saying, Deck, if we break through that area right there, we're going to get a big time spike. And then you start buying and buying and buying. But instead, we have guys, come on. Look how many better chances we have of nailing a reversal than the actual breakout. Does everyone see what I'm trying to state here? So if we keep on taking a look over on this play, let's talk about this a little bit more. It's all about odds in stock trading. Yes, you guys are correct. There is never a 100% guarantee. I cannot guarantee your success. I cannot guarantee you making money. I cannot guarantee anything in the stock market. Let's remember that at the end of the day, the stock market is not about surefire picks and guarantees. It's about calculated risk. That means understanding risk versus reward better than any part of your trading. Risk and reward. If you don't know about risk versus reward, you shouldn't be trading. And if you know about risk and reward and you ignore it, you're not going to be trading very long. So how does risk and reward essentially work in the stock market? Risk and reward essentially works in the stock market like this. So if we, let's say, go back to Tesla. Okay, let's go back to this Tesla example. And let's go ahead and break this on down and we can think about it. And we could say to ourselves, let me grab Tesla here. We could say that Tesla, what price was this? This price was right around 210. Okay. We could say, all right, Tech, you know what? I want to do the strategy. I want to, again, do things right. I'm going to look for a reversal. So you're going to look for a reversal, aka you're going to be looking for a put contract because you're climbing on up and you're looking for a reversal back on down. So you're either looking for a short or you're either looking for a put contract, right? Next to that 210 mark. Great. Now let's say we start entering. We start entering this play somewhere around 210. All right. Let's say we enter it at 209. We start entering at 210. We start entering at 210, whatever it may be. That we enter right around that red line. How do we have amazing risk and reward? Well, we know that this should be a reversal area. That means every single stop loss should be right there. Every single person's stop loss should be right above that red line. And as we are right above that red line, the most that you are willing to lose is of your choosing, which is you could say, if I lose $500, I want to get out. But as we know, what has happened every time we have hit this red line? Well, when we have hit this red line, we come on down towards it and boom, we get a bounce play. 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 And yes, there has been that crack. Or again, we come on up towards it and dang, we get that big time drop. And dang, we get that big time drop. And dang, we get that big time drop. And obviously we want to dang and see that big time drop. So the thing is, if we could say to ourselves, hey, you know what? I can lose $500, but if I nail this drop, that's going to be way above $500. In other aspects here, team, I could lose $500, but I could win $3,000. And the point is we have such a good entry. We have such a tight stop loss right there. We can only, right, essentially lose small and win big. So if we want to think about it in another kind of visual aspect here, team, let's just think about it like this here. If we think about it, what we have is this is the meter of success, okay? This is what we could win, all right? This is what we can win if we do a put contract next to that top red resistance line. And this is what we can lose. Imagine if this was a game in a casino. Imagine if this was a game in a casino where instead of roulette, okay, you know how roulette has how many numbers, like 36 or whatever it may be, 2 greens, right? Imagine if we had that. This is a roulette wheel, but the roulette wheel looked like this. And instead, this was the only red part in the entire roulette wheel, which means this was all you could lose. And all of this is what you could win. Now, let me ask you guys a question. If this dealer right here said, hey, you know what? Everyone place your bets. Place your bets, ladies and gentlemen. I'm going to go ahead and spin this wheel. Guess what I would be doing? I would be sitting at this chair and just playing this game every single day, putting it on. You got blue square, or of course, you have the red square. Which one do you think it's going to land on? I would, again, just take turns putting $100,000 here, and $100,000, and $100,000, and $100,000, and $100,000. And guess what? There's going to be every now and then it's going to randomly red there. And you know what? Take away a random $100,000. But now if we keep on going even more, guess what's going to happen? We can go ahead and add another 100,000 and add another 100,000 and add another 100,000. And then guess what? It's going to land here again. So let's go ahead and take away another 100,000. But notice what's happening. My chip stack is getting a ginormous here because this game isn't real. This isn't a real game in the stock market. The stock market would go broke. But this is a game that we can do in the stock market here, or excuse me, in a casino. In a casino, they don't have that. But in the stock market, they do have that. In the stock market, we get to pick the odds. We get to pick the game. We get to make the odds of the game. So why wouldn't we just say to ourselves, hey, this is incredible. Let's go ahead and do a game where we can only lose $500, but we could be able to win $3,000. But again, I tell you guys these things, but people don't do it. Why? Why is it that we know it, we learn it, we study it, but when we actually trade it, we just say, oh, I got a good feeling about it. Guys, that means nothing. So let's make it this point. Everyone, again, listening to this right now, let's make it today. Let's make it this point that your old habits of breakouts and kind of crazy fantasy trading and bad risk to reward ratio, that's all over. Make a pact today that you are now going to be following this, putting the odds in your favor, not only putting the odds in your favor, but also trading the entries with better odds. So now you're doubled up. Remember, we had 1 chance of breaking on out, but 10 chances of seeing a reversal. We're doing the 10 out of 1. Now again, or the 10 out of 11. Now what are we going to be doing? We're also going to be having the best entries possible. So the best entries possible right now, team, is going to allow us to have the most success as well, where if we do lose, it always works out in our favor at the end. So this is all coming down to our game plan. Our game plan is going to be patient enough to actually wait for one of these platforms. Step 2 is going to be executing on that entry near support and resistance. Step 3 is going to have that 25-cent stop loss and that 50-cent profit or whatever you may want it to be. It just follows that 2-to-1 ratio. And I know I say that a lot, so I do want to just kind of review that real quick. The 2-to-1 ratio, the easiest way to understand it is just by getting a visual of it, okay? So when we think about the 2-to-1 ratio, the easiest way to think about it is just think about it in an X and Y axis. And basically what we would have right here is on the side, we would have our profit, okay? Here's profit on the side. And on the bottom is going to be time passing, months passing, the amount of trades that we take throughout time. And let's say we start with zero profit, not $0, but 0 profit at the start of 2023. How the 2-to-1 ratio works is with every win that we make, it's going to be 2 times our loss. And some people have 3-to-1 ratios, 4-to-1 ratio. It depends on how much you're willing to allow a trade to win, but also how much you're willing to lose on each trade. Remember the example I gave earlier where I have friends that are full-time traders that have less than a 50% win rate, but still trade full-time? It's because they follow this type of graph, this type of strategy. There are too many traders out there who work throughout the entire week, work 2 weeks, 3 weeks, build up an account and lose them all in one trade. Who here is like that? Are you like that? Are you the trader that gets 4 or 5 trades and then all of a sudden you say, no, I took 1 loss and I lost absolutely everything? That's not the way to be a successful stock trader. So how, again, you could be a successful stock trader is you can lose your first trade. You can lose your second trade. You can lose your third trade. But all you have to do is win 1. You win 1 trade and guess what? You're back to your first loss because you make back 2 losses with every win. And let's say you win 1 trade. Well, now you're up here in the green. And now let's say again, you end up losing 1 trade. Well, again, you lose 1 trade, you're right here. Now let's say again, you lose another trade. Now again, you lose another trade, you're right here. Now let's say you win 1 trade. Well, now again, you're back even. Now again, let's say you win 3 trades. 1, 2, 3. Okay, nice little win streak. Now let's say say you lose 2 trades. Let's say you win 1 trade. Let's say you lose 4 trades. Let's say you win 2 trades. Let's say you win another trade. You lose 1 trade. You win 2 trades. What is happening here? I think you guys can get the point. What's happening here is that no one wins every single time. That is impossible. You know what I want you guys to really get and understand out of this is I think everyone can clearly see me teaching you guys. I'm a real mentor. I'm a real trading mentor that is here to help you guys become better. I'm truly here to actually be honest with you, not to sell you some sort of dream, not to just say, oh, go get this, buy this, that. I really want you guys to be successful. People, again, sometimes sign up to Tradecaster and they say, oh, Deck, you had a losing trade. I don't want to be here anymore. Guys, losing trades is part of it. It's managing trades is how, again, you are going to be successful. You must understand that every single trade that you take has the opportunity to lose on. But as long as you follow this strategy, as long as you follow the reversals, as long as you follow the good risk management, you will be successful because guess what happens? Over time, your P&L graph looks like this. This is what your P&L graph looks like. And how many wins did we have? We had win. Let's count the green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 wins. Look how high we are compared to where we started. How many losses did we have? Losses. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Whoa. We had 12 losses, 12 wins. But we have now grown our account from wherever we started to now upwards of $10,000. How did we go from here to here and we matched 12 wins to 12 losses? Because of everything that we've already gone over. We have done what? We have, number one, gotten in at reverse areas, not breakout areas. No way. Since we have gotten in at reverse areas, we have great reward to risk management where if we do lose, we're losing very tiny. And since we're losing very tiny, we are following that 2-to-1 ratio. If you follow this strategy, you are going to win more than you lose. Because, and you might say, Deck, can you say that? It's impossible not to. If you, again, get in at reversals, there will be more reversals than breakouts. If you get in and you have quick stop losses because you have good risk to reward management, your losses are going to be smaller than your wins. And if your losses are smaller than your wins, over time of you following the 2-to-1 ratio, you will win in the stock trading game. This is what it all comes down to. But you know what happens? People start doing it and start getting too loose. They start trying things and start going for breakouts again, start going for cracks again. They start, again, not having the 2-to-1 ratio. So I can't guarantee that if you don't follow the 2-to-1 ratio, if you, again, start getting a little crazy, if you start getting out risk and reward, if you do anything, one little change of this could lead towards, again, not you being successful. Obviously, the stock market is the stock market. Crazy things can happen at all times. But the reason or how I was able to have an 87% win rate, how I'm up 73% win rate in 2023 is by stop looking for the fantasy trades and start looking for these trades. You will have more success. I will guarantee that right now, that you will have more success in the stock market by doing this and following this over time than whatever you're just randomly buying and selling. So I want to make sure that you guys have this. I wanted to dive into this lesson today because I truly do care about you guys. I wanted to break this on down and get you guys thinking differently. I wanted to be honest. I wanted to be tough. I wanted to be hard on you guys today because I want you guys to be able to grow from it. I truly care about you guys. I truly want you guys here, and that's the greatest thing about Tradecaster. I always am going to give you guys my all. All right, awesome job.